How's it going, everybody? And before we start, remember to leave a like and also subscribe. So now we're talking basically about a huge portfolio here for retirement. SCHD, VGT, Qqqm, which, again, when we actually started this, when we were kind of tracking these ETFs, it really was up like over 420%, which is just unbelievable with the growth of these. And now, obviously, there has been a decline recently. Don't get me wrong, but we're obviously taking a look at the broader market here. I should say the longer the longer trends here. Okay, when we take a look at these ETFs, QQQ, VGT, SCHD. Let's take a look at SCHD and how they're performing, because SCHD, with its growth, you can't just take a look at the growth. I always say this when I make these videos. You can't always just look at this particular growth. You also take a look at the dividend, which is so key. 3.5% dividend yield. 3.5% dividend yield is just astronomical when you take a look at that. And really, the dividend yield, when we take a look at SCHD, is so significant. And when we take a look at VGT, with the growth itself, getting in at a good time, at a nice time, is something that you also take a look at too. And the same thing goes with QQQ. All right, I'm not gonna lie and say, well, you can't take a look at how Warren Buffett just sold off a lot of his ETFs, like SPY. You also have to take a look at that. I mean, everybody, or not everybody, but a lot of people are very annoyed when I talk about timing. Well, if you take a look at a certain stock, like let's just say Microsoft, or let's just say, I don't know, Intuitive Surgical. Well, you can't just say, well, I want to invest in Intuitive Surgical when it's when it's worth like $500, or I should say the stock itself is trading, at $500, and its intrinsic value, let's just say, is $100. Well, if it's trading at $500, and then its intrinsic value is at $100, well, you kind of might have to anticipate that stock might go down significantly. So why wouldn't you wait a little bit to invest in a stock like that? I don't know, just food for thought. Come on. It's not, this isn't rocket science. But when we take a look, though, at SCHD, I digress, obviously. When we take a look at SCHD, then, trading at, let's just say, 28.46, and then you get the dividend, you get, for retirement, all that stuff, and then you're able to see those dividends all the way through, reinvesting, all of that. Then we take a look at QQQ. Again, this is Invesco. So 5 years, it's up 70.89%. That's just in 5 years. Let's take a look at the max, though. Okay, so basically it's actually the same, because whatever, but yeah, it's up over 70.89%. So let's take a look also at VGT, which I'm actually going to you're going to get a better sense here. Okay, all time VGT, if you would have invested just one share on January 30th, 2004, it was trading at $49.08. Right now, it's $575.87, and that is a gain of 1,073.33% on your money right there. At the time, this was really it was like a Peter Lynch. This was a Peter Lynch move. Astronomical gains. Just astronomical gains, like through the roof. All right, like $49. Think about that in the sense that if you would invest let's just say $1,000. Just think of like the gains that you could have achieved if you just for $1,000. It's just crazy, astronomical gains. And SCHD, I'm not just saying you have to invest, let's just say $1,000 for, just in VGT or whatever to get those, get retirement funds. I'm obviously not saying that. You have to take a look at also, Roth IRAs, etc. Or IRAs itself, but it's just taking a look at these and kind of comparing them, and the growth is just crazy, obviously, and diversification is key too, because VGT doesn't offer a great dividend, but the growth is crazy. SCHD, the growth isn't as sharp as VGT, but the dividends are way better because you just basically you could reinvest those dividends, whatever you want to do, but that's just astronomical at that point. So remember to leave a like and also subscribe. Thank you for watching.